Um, Looks like we've got some more people trickling in. Let's just jump into it. So I've been looking forward to this event for a couple of weeks now. I get super amped up every time I talk with John on the phone about crypto. I think everybody is going to find out why I get amped up talking to John about crypto, and it's hard not to. He's super passionate, super knowledgeable about the space. Um, Rather than me stealing any thunder, we'll start it. I'm Mike Kavanaugh. I'm with Regiment. We work with Sarson Funds, and couldn't be more excited. Like I said, I've been looking forward to this all week. John, maybe you could give us just a high-level introduction of your background, and Sarson Funds. That's a good place to jump off with our fireside chat.
Well, I'll be delighted to do that, Mike. Thank you so much for having me on. I love spreading the good news of crypto far and wide, the gospel of cryptocurrency and distributed ledger technology. So I'm a Wall Street guy by training. I described this picture. I get to ring the bell on NYSE when we launched ETFs in my previous life. 5 years ago, I decided that I was done with Wall Street the regular way, and I wanted to explore cryptocurrency in greater depth. Over the course of the last couple of years, that has turned into a firm that caters to Wall Street, to financial advisors specifically, helping them get to where they need to be when it comes to understanding the disruption that cryptocurrency is bringing into financial services and the global financial markets. There's a lot of education and a lot of foundational groundwork that still needs to be done. I think it's to everyone's credit that's on this call today that they're interested in gaining additional knowledge about a complex financial instrument that has the potential to change the world in such a profoundly positive way. I think that there's no greater blessing in life than being able to do well while doing good. And I think that cryptocurrencies give us exactly this opportunity. And we'll explore more over the course of this chat on why I feel like cryptocurrencies are such a positive force for good in the world. But we'll start with some basics on cryptocurrency and how the technology is really kind of liberating populations that are disenfranchised and are currently locked out of banking. It helps me get out of bed in the morning knowing that even though we're tearing down some structures to build up new ones, the net result of all of our efforts is going to be a world with less overhead and more democracy, or a more even playing field for all financial participants. And that is very much a mantra in the cryptocurrency space. The idea of decentralization, moving away from having large institutions be our trusted intermediaries on financial transactions. Instead, we're moving to an environment where there is no intermediary between the transaction Mike and I would do with each other. I would send Mike Bitcoin from my wallet to Mike's wallet, and there wouldn't be a Chase Bank or a Wells Fargo in between the two of us verifying that, in fact, we are both who we said we are, and that we did want, in fact, to do that transaction, and that our accounts had that much money in them. That's all handled on the blockchain, and we'll dive into that. I'm sitting in rainy Indianapolis today, not far away from Illinois, so I'm sharing your weather. I think the whole eastern seaboard is sharing in this gloomy October weather today. We didn't get much wind here, but I bet some people on the call got blown pretty hard yesterday. And the hurricane that passed through, I hope everyone has made it through that okay. So Indianapolis is where our trading and our operations is located, and we also have a marketing distribution office in Boston, Massachusetts, which is my hometown. I worked for 12 years in Manhattan, doing financial services the regular way before moving out to Indianapolis with my wife and our 3 young kids, looking for some more space to spread out that we couldn't find in Hoboken, New Jersey. Austin, Texas, the way I see represented on the call, that was our second choice. And on the daily today, I'm sure wishing we chose Austin, Texas. Austin, I don't need to tell you, Kevin, Austin is a hotspot for cryptocurrency and a cool city generally, which is probably the reason why it adopted cryptocurrency so readily. So I'll stop there, Mike, and turn it back to you and let you go from there.
Yeah, no, it's helpful to get the background. I love the crossover, from Wall Street to crypto. That's what attracted me to the space. I started seeing smart guys like you in Indy and Boston and Chicago, people that have been deep entrenched in financial services and fintech for decades, that left the Wall Street traditional scene and got into crypto. And when I saw that, 5 years ago, like yourself, that's when I started diving into crypto. So I really think it helps, as far as like build the the affirmation that this is real. Like people that have spent their lives and careers building their careers in traditional finance are leaving and getting into this non-traditional. And I love your point about education. Everybody, that's why we're doing these with, and can't thank Rocket Dollar enough. We're bringing on professionals like John to say this is real. We don't want to overhype this. We're not shilling anything, but we want to answer questions. We want to give you the reasons why people like John have left the traditional environment. We talked last week a little bit, John, and you made a fascinating point, and I think it's something worth starting off with, like the first question. Everybody talks about, oh, I got into crypto and then it busted. There was like that boom, late 17, after, I think every Thanksgiving table in America was like, hey, grandpa, can you buy me some Bitcoin for the holidays? And then you just watch it go from 20,000 down to 3 in the next year. So how much of that plays into the, like the current environment, and what's changed? I know there's been some changes since that boom and bust, but maybe you could just give us your perspective on that time frame.
I would be delighted to do that. And you have your timing exactly right, Mike. It was 3 years ago this month, essentially, that the cryptocurrency rally started in a significant way. And then around Thanksgiving, I remember having the conversations with my sisters and watching companies on the NYSE, like Riot blockchain, that went from 2 to 14. They only had 9 employees. All of a sudden, they had like a $300 million market cap. And then it went back to 80 cents eventually, like a year later. So that was 3 years ago. And sometimes now, as I do like what I usually do, and I try to pay like my bar tab with Bitcoin, and I get the response, that's still a thing? I thought that ended 3 years ago. And this has been very much the viewpoint that people have about cryptocurrency, is that it was a flash in the pan, and it was like a fad that's ended. And the price action did exactly what you said, Mike. It went from 20,000 to just above 3,000 for a drop of 85% on the price of Bitcoin. That was the fourth 85% correction in Bitcoin's 10-year lifespan. So at this point, we have to confess that that type of volatility isn't unique to the asset class. It's a feature of the asset class. And so I would suggest to the audience that we're going to see another 85% correction in the price of Bitcoin at some point. But what we see in between these 85% corrections typically is a 12 to 20x expansion. So then the 85% correction leaves us higher than we were at the top of the old bull market. So what does that look like in numbers from today's levels? Well, if it were to have a similar experience to the last 4 boom bust cycles, it would be Bitcoin going up to a number above 200,000 and then correcting back to 30,000 or so. So will that happen? In my opinion, yes, I think it will. So can I say that we should invest betting for that outcome? No, I don't think that's prudent. But I think there's a realistic chance that we go through another super cycle on Bitcoin prices. And what we want to talk about today is like why is Bitcoin catching on like wildfire around the world, and why? And like the reason I think I always stop and smile is the top 3 reasons why Bitcoin's catching on around the world are completely lost on us, really, here in the United States. We're almost blind to the value proposition that Bitcoin offers to other people, and that is not our fault. It is a function of the fact that we are wealthier than people around the world generally, and we are also well served by the current existing banking architecture, which is a function of having really designed Western-style banking. 50 years ago, people that are now long since retired, did a heck of a job setting up the current monetary system, and it serves our needs very well. I don't know about you, Mike, but I haven't had a single transaction where the wire fee destroyed the economics of the deal. Have you?
No.
Well,
I have not.
If we were in a country trying to do business with someone else in another country and selling them a good or a service for $50, a $50 wire fee would be problematic for us. It would destroy the economics of the deal. And increasingly, as people on the internet are selling, a logo design or a video or some type of a digital good across country borders, that $50 wire fee on a $10 transaction for the Swift International Wire process is problematic, and it is increasingly a barrier to business. And so Bitcoin and cryptocurrencies generally address that unmet need for the ability to move small amounts of money internationally between different individuals located in separate countries. That's one of Bitcoin's first value propositions, is streamlining international transactions. A second value proposition is bringing banking to the unbanked. Now, everyone that we know probably, and everyone on this call probably has a bank account, and banks want us. But if we only had $80 of net worth, which a lot of people around the world have that kind of a net worth, like no bank would really be that interested in having us as a client. There are currently 1.7 billion with a B people that are unbanked in the world, but 1 billion of those people, or more than half, have a smartphone. If you have a smartphone, you all of a sudden have access to banking thanks to cryptocurrencies. This is a big deal. If you don't have access to banking, you can't save money safely. You have to literally stash it in your house and hope that no one steals it. It doesn't get lost. You can't participate in the digital online economy because you don't have any digital money. You don't have the ability to use a credit card or pay a digital check. So you can't do commerce at a distance. You have to, if you want to buy a good, you have to hand them the money in person. You can't lend money. You can't do microfinance with your relatives that are far away. You are basically at an immense disadvantage when it comes to your ability to lift yourself out of poverty, the regular way, basically through hard work and ingenuity, because you can't participate in the global digital economy without banking. So digital currencies bring banking to 1 billion people that have smartphones, and they're going to, and they already are, but they're going to continue to be this massive transformative power, a positive force in people's lives to lift themselves out of poverty. For this reason, the Gates Foundation, which is committed to doing good all over the world, the Bill and Melinda Gates Foundation, is working to spread the adoption of cryptocurrencies throughout Africa and Southeast Asia for this exact reason, allow people to lift themselves out of poverty. So there's another value proposition of Bitcoin, which is bringing banking to the unbanked. And then the final value proposition that's lost on us here in the United States is the ability, really, but increasingly less every day, is the availability of an alternative to your local fiat currency. Now, where this isn't lost on people is in places like Venezuela and Argentina and Iran and Zimbabwe, where the governments are essentially stealing from the citizens through the printing of money. When you print more money, it devalues your currency, and everyone that has savings in the bank, the value of their savings, the purchasing power of their savings decreases. And dictators, like in Venezuela and in Iran, they count on this because they count on their ability to basically steal from their citizens to fund the military to remain in power. And the citizens are very, very happy to be able to move some of their stored units of labor in their currency into an alternative currency out of the thieving hands of their governments. And for this reason, Time Magazine has written an article last year that talked about Bitcoin as being a powerful force for freedom around the world specifically because it takes power away from dictators. We saw last year that Venezuela started accepting Bitcoin and Litecoin for people that owed tax payments instead of the Venezuelan bolivar, which had almost no value, because they wanted to be able to be paid with something that had some value. And Venezuela will go down in history as the first currency in the world that failed to cryptocurrencies, but not the last. We're going to see probably the weakest 1/3 of all currencies fail to cryptocurrencies eventually, or in the next 10 years, I should say. But we're even seeing people in what are historically been considered very stable currencies, like the euro and the yen and the Chinese renminbi and the dollar, exiting their currencies in favor of non-inflationary currencies such as Bitcoin. And this is a function, of course, it's a protest to the fact that governments around the world are printing money, always with good reason, always to prime the pump of the economy or to fund a social program. But the reality is that it devalues people's stored units of labor that are denominated in that currency. And we're seeing the failure of fiat currencies manifesting itself in the spectacular price rise of digital currencies, of Bitcoin. And we can watch that happening, and it happens really with a high degree of correlation. We see the stimulus program that came out at the beginning of COVID, and immediately Bitcoin reacted with a boom higher, because the more money that government prints, the higher a scarce hard asset will go, such as gold or Bitcoin. And I know that I sometimes get eyebrows raised when I call Bitcoin a hard asset, Mike. I don't know how you feel about referring to it as such, but it is very much similar to a commodity in the fact that it's in finite supply, and it's very durable, and it's not easily replicated or substituted, and it can be exchanged, in place of fiat currencies for goods and services.
Yeah, John, this is Brennan here, just interrupting for a question. It was related to what you're just talking about. David was asking, about the supply of Bitcoin. Is the supply of Bitcoin infinite, or, does it have an ending point? And, with that supply of different currencies, how does Bitcoin and other cryptocurrencies maintain their value?
It's a good question. It's a big part of the thesis for Bitcoin and digital currencies. So Bitcoin is essentially a software protocol. And the software protocol is not totally unlike other protocols we use on the internet. We move from website to website using, and this is a roundabout answer, I apologize in advance. We use hypertext transfer protocol, right? HTTP. This is when we find a link, we click on it, and it takes us to another web page. Before that, it used to be file transfer protocol, and that wasn't as user friendly. And so now everything's hypertext transfer protocol. And Bitcoin is a protocol for moving value between people. I have money, now Mike has money. Now Mike has money, now Kevin has money. And it's this value transfer protocol. And the reason why it remains stable, so that we can use it for transactions, is because the protocol itself limits the supply of Bitcoin to the market. So you may have heard that there will be 21 million Bitcoin one day. There are currently 18 million Bitcoin approximately. Can I share screens here?
Please do.
Okay. My screen. That's my email.
If you look at the top, there's a screen next to the microphone.
Yep, I'm seeing exactly what to do here. Go back to this. Okay, let me share my screen here so I can show you how many Bitcoin there are right now. I also saw a question from someone in the chat that went by that said, what is a good resource for cryptocurrencies generally? And so I'll knock those two birds with one stone right here. This website called Coin Market Cap, CAP. This Coin Market Cap website is kind of like the Bloomberg for cryptocurrencies. It will show you the largest cryptocurrencies. That will show you their performance. You can pull a chart. You can click through. like onto Bitcoin. You can get additional charting abilities, and you can get more information, on the history of that Bitcoin, of this particular cryptocurrency. But you'll see here that the supply is currently 18.5 million. I don't know if the highlighting is showing up when I do that or not, but there are currently 18.5 million Bitcoin in circulation. The max supply here is 21 million Bitcoin. So there's a like a release schedule that's built into the software that is the code for Bitcoin that says how many Bitcoin will be released over what time period. And if you've ever heard of something called the halvening, it basically is just like the slowing down of this releasing of new Bitcoin to the marketplace, so that as we get closer and closer to having all the Bitcoin released, the curve of total, like how long it's taking, keeps getting steeper and steeper. And it's called a asymptotic curve. And there will not be a full, all the 21 million Bitcoin will not be released until the year 2100. And at that point, there'll be no more Bitcoin released. And then Bitcoin will be trading just as a currency with zero inflation. But currently, the inflation rate for Bitcoin is 1.65% per year, based on the amount of Bitcoin that are currently being released and the amount that currently are in existence. It is argued that this 18.5 million number is overstating the amount of Bitcoin that actually exists, because Bitcoin, as we can talk about later, can become permanently lost. And the way you permanently lose a Bitcoin is you lose your password that gives you access to that Bitcoin, which is simultaneously a strength and a weakness of the asset class. So I'll stop my screen sharing there. So did that answer the question about the supply? 18.5 million currently in existence.
It's great stuff. It's a lot. And depending on, we didn't screen the audience to get their level of sophistication. So we might have people here that know that. But, in my journey in cryptocurrencies, David's question comes up a lot, like how it's valued. Another question that comes up a lot is who actually uses it, like the utility, adoption. Maybe you could speak to that a little bit. My grandfather, to overshare here, he owned a gas station, and in the summer I would work in the gas station. The summer we got a credit card machine in the early 80s, he put it in, it was the old sliding card machine. He's like, here's the credit card machine, but don't let anybody pay by credit card. We're cash only. I went into a store the other day and there was a sign that said, you can't pay with cash. We're completely cash free. And my grandfather's rolling over in his grave. I never thought it would happen. What is the adoption and utility looking like for Bitcoin? Because I get that a lot. Like, who uses Bitcoin for anything? Like, what are you seeing out there?
So, if you're not doing commerce on the internet, if you're not doing international transactions, if you already have a credit card, like, you don't need Bitcoin as much as someone that maybe doesn't. But in the United States, people are using Bitcoin kind of like the way they use Venmo. So let me share with you, everyone on the call. Coinbase is the largest player in cryptocurrency in the world. They have 30 million accounts, and they are located in San Francisco. It is an American company. They are invested. They have a $10 billion enterprise value based on their last round of funding. They're invested in by both Goldman Sachs and BlackRock. So they have fabulous institutional backing. They are an FDIC chartered bank that will cover your cash deposits, not your deposits in Bitcoin, just the cash that they may be holding, waiting for you to turn it into cryptocurrency. They have an app that you can download that I highly recommend you do. It's called Coinbase, and you can open it up on your phone, and you can buy Bitcoin. So you can hook it right up to your checking account. And then when you go into your Bitcoin account, you'll see, like, here's my Bitcoin account. I've got a whopping $300 in my Bitcoin account, part of which is 0.02 Bitcoin. One of the important things that I like to always point out to people that isn't immediately obvious is that you do not need to buy one entire Bitcoin. In fact, it's almost kind of a disservice to Bitcoin adoption, the fact that one Bitcoin sounds so expensive. If I wanted to buy $100 of Bitcoin right now, buy with cash, $100. It's linked up to my Chase account. Preview buy. It's going to cost me $100. It's going to charge me 99 cents in fees because that's what they charge 1%. I just bought $100 worth of Bitcoin. Now my balance will go up to $400 of Bitcoin. I try not to have any cryptocurrencies in my personal account because we manage 6 cryptocurrency investment funds, and so like it creates a conflict for me to have crypto. I don't want to sell something in my own account for reasons unrelated to the investment thesis, but be buying it for clients. That would be a little bit too Goldman Sachs of me, Mike.
Yeah, so thank you, John, for that. And we got another question here. We've kind of been talking about Bitcoin as and crypto as asset as a transfer of value. One of the questions here was, how do you compare Bitcoin to something like gold or a precious metal as a transfer of value and a type of asset? Its similarities come into play when you talk about Bitcoin as an alternative to fiat currency and a store of value. Just like gold, you can buy 1 ounce of gold today, and it could cost you what are we, Mike? $2,000 for an ounce of gold? Around that?
I believe so. Right around there, yeah.
And a month from now, it could be worth $3,000, and like you can make 50% return because either the dollars that it's priced in have dropped, and so it looks like the price has gone up, or it could be that the demand for gold is soaring, and it goes up for that reason. Same thing with Bitcoin. You can buy $2,000 worth of Bitcoin today, and it can be worth $3,000 next month because either the dollars that it's priced in have gotten basically deflated, or the demand has increased, and so the scarcity of the commodity, in this case Bitcoin, has become more scarce. Unlike gold, Bitcoin's very easy to send attached to an email. It's really quite hard to email someone some piece of gold. So gold suits the new digital economy and the internet very, very well. In fact, if you think about the internet and how amazing it is, like it's amazing that we can be having this crystal clear call right now that's costing no one any money, except maybe for Mike, I'm not sure. But it's crystal clear, and you could be all around the world. And the reason for that is because data moves freely on the internet. We can move data around at very, very low cost and essentially in real time. But we can't move value like that, or at least we couldn't until the invention of cryptocurrencies. Imagine getting off the phone call, a Skype with someone in your friend in Asia, and they need $1. You couldn't send them $1 before Bitcoin. You could not send them $1, but you can have a video call clear as day, but you can't send them $1, not even a penny. Bitcoin changes that. So Bitcoin allows people to trade or transfer a value on the internet the same way that we transfer data. It like emancipates the movement of value. And now that comes with unintended consequences because we, in the West, we really like our ability to shut off funding to rogue nations or to terrorist groups. And cryptocurrencies have made it easier for some of these groups to get funding. And they have come under a lot of scrutiny for that reason. But the long-term good of allowing the internet to move value vastly outweighs the extra regulatory hurdles that we must subject ourselves to make sure that we don't fund terrorists and we continue to have financial restriction tools in our toolbox when trying to remove power from dictators and other bad actors on the global stage. And if you think about some of the amazing things that can happen when you can start to move value, the way we move data, if you're not using your processing unit on your PC when you're sleeping, someone in a different side of the world can pay your computer 10 cents to use your processor or to store files that are encrypted on your hard drive because you're not using that space. And that's awesome. Another thing that cryptocurrencies do is they disintermediate the need to send a paper bill to someone. So if my cell phone was a cryptocurrency cell phone, then as I used it, it would be paying AT&T as I'm talking for the time I'm talking. And then when I hang up, I'm done. AT&T has been paid. I no longer am having to have a contract with AT&T. And in fact, the next time I pick my phone up, maybe I'm paying Sprint. Whoever got the lowest price for me at that exact moment, it creates the ability to create like digital services delivered a la carte. When I get off the phone in Mexicotel, you know, I never have to have a contract again with a phone provider, and that's not very far away at all. That's 2 years from now. 2 years from now, people will be using blockchain phones, and they won't be having to have cell phone providers, and we'll be able to choose. You know, do I want to have the best signal, or do I want to have the cheapest signal? What's my budget like this month? And the disintermediating of the billing company itself will save the phone providers money. They won't have to worry about not getting paid. They're getting paid in real time. Up until the advent of cryptocurrencies, it was impossible for a business to have a unique customer that only paid them 10 cents.
Yeah.
But with digital currencies, that no longer matters. You know, I can use Mexicotel one time for 10 cents and they get 10 cents and they didn't spend any money to get it. So this is going to really kind of like empower whole new industries that do micro billing. And this is really exciting because ultimately it removes overhead from the economy and the fact that now there's less paper bills to be mailed out. And for that month that we don't use our phones, we don't pay for our phones.
Yeah.
But it's not necessarily a bad thing for consumers.
Yeah, and so just to add on to the gold there, so you know the IRS typically sees both cryptocurrency and gold as property, which is really nice for the compliance side when you're investing with your IRA because they're treated very similarly. So a lot of the same rules, you know, we talked about in our last webinars is that you know, you can't cross any personal gold with any retirement gold. You have to make sure your wires don't cross there. So a lot of when people look to, you know, how do I handle cryptocurrency in my IRA? They look back to case law, you know, people that tussled with the IRS, people that were compliant with the IRS. How did they stay compliant on gold? Can inform us how we stay compliant on cryptocurrency in an IRA, because there are sometimes some extra rules people can trip up on. So John, we had a few more questions here, kind of relying on, you know, micro payments, you know, and fees and stuff like that. You know, we have a partner, you know, One Gold that has been trying to make digital gold more of a thing, you know, and decrease fees there to move digital gold. Now we have cryptocurrency, we have transaction fees that you're talking about. How are fees calculated in cryptocurrency when you're moving cryptocurrency from one to another or one person to another? And how do those fees influence, you know, decision making when you're investing and transacting in cryptocurrency?
Good questions. So the fees are, I just showed you a transaction where there was a 99-cent fee on a $100 transaction. 99 cents of that was Coinbase's fee. The network itself takes an incredibly small fee per transaction. For example, there was $1 billion that moved, $1.1 billion that moved earlier in the week that got everyone excited because that's a big transaction, even for Bitcoin. It moved from one wallet into two wallets, and it paid a total fee of $3. There is no bank on earth that will move $1.1 billion of value for $3. If you wanted to move $1.1 billion of gold, it's going to cost you over $1 million. You know, it's a maybe less. It's going to cost money though, real money. So the fees are essentially like negligible on the network itself. Now you might see big fees when you're trying to invest in cryptocurrencies, and that's because whatever interface you're using, whether it be Coinbase, like what I use, Coinbase, very easy, good customer service, very expensive. The most really the most expensive way to do it at 1%. So the fees for a transaction from one individual to another, very low, unless your platform charges some type of fee, like a 1% fee, which many do. So it's kind of not a very tight answer. I apologize for that, but you should generally expect fees below 1% on cryptocurrency transactions.
Yeah, and something I think people are another questions about like Ethereum gas fees, but just in general, you know, obviously they are not, but are Bitcoin fees the same as Ethereum and other types of cryptocurrencies? Can you explain a bit why those fees might be different on different networks, or why people jump into, you know, Ethereum rather than Bitcoin?
Yeah, so I'd love to talk about Ethereum. In fact, I'm crazy excited about Ethereum, and Ethereum has been suffering from high gas fees currently, and like the gas fee is basically like the payment to the network to validate the transaction. Now, transaction validation we can talk about. It's a little bit nuanced or a little technical, but what I think is the easiest way to talk about it is in context of Bitcoin mining, which I'm sure people have heard about Bitcoin mining. And Bitcoin mining, we do Bitcoin mining at my R&D facility. We have 7 computers lined up in a row, and what they're doing is validating transactions. And when you validate transactions and add good information to the ledger of all of transactions that have happened, which is called the blockchain, information gets added 1 block at a time in a giant chain, in theoretical chain. You get paid like a very small piece of a Bitcoin or an Ethereum, and that incentivizes users around the world to continue to validate other people's transactions. If everyone was just validating their own transactions, this would create a scenario where there would be, perverse incentives to put false information on there to basically like feather your own account or like create a financial gain where there shouldn't be one. Ethereum and Bitcoin are different. They are the 2 biggest cryptocurrencies. Let me share a screen again if that's okay. Let's see here. Screen right here. Share. We're going to talk about the Ethereum, but before I do that, where'd that thing go? Bear with me a minute. I'll show you on, are you guys seeing what I'm seeing? Yes, okay, good. So here's Bitcoin with a total market cap of $250 billion. Here's Ethereum with a total market cap of $44 billion. Then this is a stable value token, 16 billion, and then all the rest of these cryptocurrencies much lower value. So the big 2 players are really Bitcoin and Ethereum. So I think it's important to kind of differentiate between the 2 of them. And I already mentioned that Bitcoin is this protocol for transferring value. I have value, Mike has value. Mike has value since it's somebody else. Very good at binary transactions. And that's what it was designed for. And it's somewhat slow. Those batches of transactions that are put onto the blockchain, called blocks, they happen once every 10 minutes. And once every 10 minutes is fast enough if we're buying a tanker full of oil from, for $30 million, no one minds waiting 10 minutes. But if you're trying to buy a cup of coffee at Dunkin' Donuts, 10 minutes is too long. So like Bitcoin's not the end-all solution. Other cryptocurrencies have been launched that are better at certain things, such as being faster. Or in the case of Ethereum, better at doing complex transactions. So Ethereum uses program language that is considered to be Turing complete, which I believe is a nod to Alan Turing, a psychologist. Anyway, a Turing complete programming language can contain an if-then statement. Not like before with Mike, it's like, I have money, I sent it to Mike. Now we can all of a sudden have a transaction that says, if I lend Mike $500,000, then he'll pay me 5% annually paid monthly every month, or else I'll get the collateral back, their house. So it can hold like a financial contract or smart contract on the blockchain itself. And like all of the parameters for that transaction can be part of the agreement between Mike and I. And this is what Ethereum does. Ethereum's like a digital contract spreadsheet, or that like a Google Doc for contracts. And Mike and I are attached to the same contract, and the terms are there, and they're codified and immutable, meaning that no one can disagree what we agreed to last year when I lent him that $500,000, and he didn't make the $5,000 interest payment. So automatically the collateral flings back to me. And like this is exceptionally useful if you think about all of the different things we do in our society that require financial contracts. Title to property, mortgages, loans, you name it. Everything we do is contract-based in the West. And Ethereum creates a platform for those to be put on a public ledger that's immutable. Then no one can say, oh yeah, well the company changed the terms because the company wants to steal my asset. Well, the Ethereum blockchain is a public blockchain and it's considered immutable. The state of Illinois is actually passed a law that says you cannot challenge the immutability of a blockchain because it's basically established case law that like these public ledgers aren't able to be manipulated, and so your attorneys can try to argue whether or not you entered into a contract under false pretenses or anything else, but they can't argue about the immutability of the contract. And this is really useful for different various industry applications. And this is why so many of these Fortune 100 companies have joined the Enterprise Ethereum Alliance, because they want to standardize basically like the contract language that's going to be the most useful for their industry. And what someone needs that's making a mortgage loan on Ethereum is quite a bit different than what PSE&G would need to do to send you your bill for electricity consumption, because there's different features that their contracts will need. Everyone's, I shouldn't say everyone. The companies that are shown here, and many others that aren't shown, have joined the Enterprise Ethereum Alliance, which is basically just saying that they're committing to using this platform as their preferred smart contract digital currency platform at the current moment. And they're having their software engineers and their analysts learn how to use it. And that's very, 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 very good for the long-term use case behind Ethereum. And Ethereum's price has pretty much followed suit with Bitcoin's price. Let me get that back up. Meaning that it got quite expensive in 2017. It went to $1,200, and then it went down quite a bit. Let's see if I get a 3-year chart. It went down, I think, to like $40 or something terrible like that, and maybe like $87 as the lowest I see. And now it's back to $400. And Ethereum gas is becoming problematic. Ethereum network is capable of doing 7 to 10 transactions per second. Sounds fast until you think about the fact that the whole world is using it. And at which point now, and one transaction might involve me taking a piece of collateral and attaching it to this smart contract, and then it might involve like 5 steps. So it's like 5 times we interact with the blockchain and the network. And like the gas fees associated with an Ethereum smart contract can be $5 each time. So now it's like $25. And $25, no big deal if it's a mortgage, but kind of a big deal if you were just trying to do like something that was like a microfinance thing, like keep track of a 10-cent phone call. So there is a upgrade underway for Ethereum called Ethereum 2.0. It's overdue. It was due 2 years ago. Vitalik Buterin is the CEO over there. He is taking a lot of flack for not getting this upgrade out as fast as the market wants it. And just like a company, Ethereum is not a company. It's a decentralized network, but they have a core development team. And just like a company can let you down with like their ability to upgrade, AOL and the dial-up doesn't turn into broadband fast enough. We finally all quit AOL. The same thing could happen to Ethereum. They might not get their upgrade out fast enough. We might all quit Ethereum and might go to a different smart contract platform like EOS or Cardano or Casper Labs, which we own at Sarson Funds. Time will tell. VHS and Betamax. There was a war. There's been lots of protocol wars in this country, and there will be lots going forward in the future. Hope that answered the question.
It's great stuff. There's a follow-up here on the Ethereum 2.0. Is the new Ethereum 2.0 an upgrade to the regular coin, or is it a coin itself? Is the question from Charles. And thank you, Charles, for asking.
It's going to be an upgrade to the coin itself. So there won't be another coin. Ethereum will still be Ethereum. It's going to have
upgrade to the regular coin.
Upgrade to the coin. And then, Bitcoin's gone through dozens of upgrades. It's not the same Bitcoin as it was when Satoshi Nakamoto introduced it 11 years ago. It goes through upgrades for improving security, improving transaction volume, improving whatever the community agrees needs to be improved. And there's a funny thing that happens in cryptocurrency land, and Mike, you can stop me if this is too much in the weeds, but the community doesn't always agree on what upgrade needs to be done. Some people, it's kind of like the Supreme Court. Some people are textualists, meaning that like they look at the text of the Constitution and they like go by that. Other people are more like interpretivists, and they want the document to grow with the country's culture. Very, very distinct schism between the two parties. Same thing with Bitcoin. Some people want there to be Bitcoin in its pure state, that way that Satoshi Nakamoto designed it. Other people want to see Bitcoin evolve and become like more and more useful and increase its capacity. And this happened 2 years ago. Actually, I think it was like almost 3 years ago now, December of 2017. The Bitcoin community was seeing a lot of interest because of the dramatic price rises. And their network got congested, and it was taking a long time to get a transaction done. Small transactions weren't getting done at all because they weren't having an associated transaction fees that were worthwhile for anybody to bother with them. So there was a movement to take the block size of how much data was in one block and take it from 2 megabytes to 10 megabytes. You would think this would be a very reasonable proposal. Half of the community said, no, we're not changing a thing. Half of the community said, yes, let's change it. And we had what's known as a fork. All of a sudden, there became a whole new string of Bitcoin that were doing it a different way, that were no longer compatible with the old way. And so now we have 2 Bitcoins. And this is often presented as a flaw or like a challenge to the disinflationary aspect of Bitcoin, because all of a sudden we didn't go from having 21 million total, now we have 42 million total. There's 2 different blockchains of Bitcoin, and I'll show you on my screen what that looks like. Now, the good news is, as an investor, you get both. They give it to you. It's almost like a spin-off, but it kind of damages the thesis of like the scarcity thesis. And it was called Bitcoin Cash, and Bitcoin Cash still has value to this day. Let's see here. Screen share again.
John, I'd like your analogy of the Supreme Court. Like there's a schism. I've always called it, it took 1,517 years for Martin Luther to fork Lutheranism off of Catholicism. It seems like it's a philosophical fork similar to that. It only took 7 years for Bitcoin to have a philosophical split.
Well, right. And, people are like religious about it, so it's a good analogy. And they even say the guy who runs this Bitcoin Cash chain, his name is Roger Ver, and they refer to him as Bitcoin Jesus, because like he's so passionate about bringing Bitcoin to people, and he looks like kind of like Jesus. He's got like long hair and a beard and whatnot. But so this Bitcoin Cash chain all of a sudden spun off, and like here it lives to this day. And this has a 10 megabyte block size. And so this in theory this chain of Bitcoin can handle more capacity than the regular chain of Bitcoin. And in certain countries in Eastern Europe, this one's the rage. This one's got really cool functionality. It's got a cool development team, and like all these cryptos are doing is helping people transfer value easily. And if you don't believe in the long-term potential for Bitcoin Cash, that doesn't mean you can't accept it as a payment. As a merchant, accept it as a payment, turn it into something you believe in. It's just kind of like a utility vehicle. I've also tried to make an analogy. It's never landed quite right. I'll try it again though anyway. Of like, remember we play baseball, you don't have enough people for every base. You put an invisible runner, on whichever base you need their invisible runner to be on. And like that person can score, and like you don't worry about them anymore. You turn them into a run, and then like they're done. And like, so same with Bitcoin. You can send Bitcoin as like your invisible runner to transfer value from you to someone else, and they can turn it back into fiat in their home country. And then like it just moves. It just is a utility to move, a placeholder to move value. And so, and you don't have to spend much time in it. You receive a Bitcoin Cash transaction, but you prefer it to be in Bitcoin. 1 minute after it arrives, you can turn it into Bitcoin. You prefer it to be in euros. 1 minute after it arrives, you can turn it into euros. There are 190 on-ramps for Bitcoin in 190 different currencies.
And John, so something that I've heard, you probably heard it in the news recently. We're talking about forks, different technology, updating of coins, and there's these old veteran coins and there's all these newer ones nipping at their heels. There's a lot of talk about the energy usage that some of these blockchain networks use with all the mining, blockchain networks, and all the transaction, and all the computers around the world to keep things going. So how do you see the energy market and the different energy uses of blockchains changing, and maybe changing the old dynamic and the new dynamic?
Yep. So like the mining machines that we have running, like they put off a lot of heat. They're in the garage of this house that we have, and the garage is like 100 degrees. So that's like electrical resistance over copper. So that's like basically the same thing as the space heater. We are using a lot of electricity as a population in the process of empowering the peer-to-peer payment networks of different cryptocurrencies. I've seen estimates that it's about the same amount as the island of Manhattan uses. Or more specifically, that the Bitcoin network costs $300,000 an hour in electricity to run. All I can say to that is that the expense is only able to be measured in terms of the value that it's delivering. And so clearly, there's more value being delivered by the Bitcoin network than $300,000 an hour to the world. Lots of industries use up a lot of energy. The current financial industry uses up a lot of energy, more than Bitcoin. But yes, proof of work mining uses a lot of energy. You have to basically use your computers to solve cryptographic puzzles, hence the name cryptocurrencies, to get permission to put a transaction block on the blockchain. That's what keeps the network secure. If everyone was just allowed to put any block on they wanted, then you'd be able to put a block on that held your own transactions, and you could perpetrate fraud that way. There is a movement away from proof of work to something called proof of stake. Ethereum 2.0 will be a proof of stake process. And proof of stake basically is like the idea that you put up collateral as the transaction validator. And if you validate a false transaction, you lose your collateral. That's very much like the regular way that centralized banking works today. So cryptocurrency purists kind of like resist and push back against this idea of proof of stake, because ultimately Chase Bank is basically backing up transactions today, or whatever bank, the Federal Reserve, with their collateral. And there's a fear that as we move towards proof of stake, we will get back to the centralized banking system that we tried to get away from. So this battle is yet to be decided. Again, it's a schism like this whole textualist versus interpretive view of the Constitution. Cryptocurrency purists are going to like the idea of proof of work, whereas pragmatists, people that want to see Ethereum gas fees go to 1 penny instead of $25, are going to, and they want to see the environment, still be around for the next generation. They will prefer proof of stake. The answer is probably, like most things, that there will be different times where each one is appropriate. But yes, the energy consumption is a big knock on cryptocurrencies. I don't love it. The fact that my electric bill is $1,100 approximately a month. That seems like a lot to me. But that problem has yet to be really kind of figured out.
Yep. John, I can't thank you enough. I hope everybody that attended today understands why I get so charged up anytime I talk to John about crypto and what he's doing in the space. Can't thank you enough for your time, John. Brendan, thank you for co-hosting with us, Rock Dollar. I think it would be remiss, and again, really appreciate your time, John. I know you got another fireside chat coming up later today. I'd be remiss and just a terrible fireside chatter if I didn't let you at least give the people an idea of, your funds itself. Could you just, before we leave, just give us a high-level overview of Sarson Funds? And I'll give you a plug. And what I really like about it is you're one of the very few FINRA, and SEC registered investment advisor, meaning that your professional licenses are just as if you were fiduciary trading and investing in traditional spaces. you've got that moniker, which to me gives this credibility that you are a fiduciary. You do give investment advice under the same like auspice of any wealth advisor. So I wanted to plug that, but just give us a high level of Sarson funds. And I know our hour's up in a minute, but can't thank you enough.
Thank you, Mike. That's very gentlemanly of you. Yes, we are a registered investment advisor. We own under the Sarson Funds umbrella, and we like to give financial advice. You know, we talk about cryptocurrencies. I have my website up here. We lead with education. We want people to understand this asset class. We encourage people to download the Coinbase app and trade it on their own. The more that you dig into cryptocurrencies, I believe, the more you'll see their broad-reaching potential. Then we offer investment portfolios for accredited investors only. And we have 3 strategies that we actively manage. And those are a large coin strategy, a small coin strategy, and an income strategy. And the minimum is $50,000, and the lockup period is 90 days. After that, we have daily liquidity, and we have daily net asset value. You can log into your accounts. They're all fully transparent. We think that we try to just take some Wall Street standards and bring them to the cryptocurrency space, so that way, as an investor, you can incorporate a cryptocurrency allocation into your overall asset allocation mix. We like to work with financial advisors because your financial advisor knows, your financial advisor has the best understanding of like how this asset class might fit into your broader financial framework and your goals and your risk tolerances. But if you don't have a financial advisor, we have financial advisors here. We'd be happy to work with you. So thank you for that, Mike.
Yep. Thank you, John. Thank you, Brendan. We'll send up a follow-up email about John and his funds to everybody that attended and registered. And again, John, can't thank you enough. Thanks for taking time out of your schedule. Brendan, always a pleasure, sir. Thanks to everybody, and have a great day.
Thank you, everybody. Bye. Thank you, Brendan.